G'day, fools. I'm Scott Phillips, the Motley Fool's Chief Investment Officer here in Australia. You know that. I just say that because you don't want to know who you're talking to, who's talking to you. And I'm joined today by Chris Copley for our latest in the series, Motley Fool Stocks in Focus, where we get to bring you some ideas that are or maybe aren't on our scorecards, but companies that we know you like, you hold, the companies in the news, their businesses you want to hear our views on. So I get to have a chat with some of our crack analyst team, including Chris, on some of the companies that fit that bill. Today's business, mate, is a little cloud company, a very big cloud company these days, called Xero, the cloud accounting software that really did revolutionize Australia, New Zealand, UK accounting, and hopefully for the better. Revolutionize accounting is either something you love or hate, depending on where you've come from as a career. As it turns out, you have come from that sort of career, Chris. So we might touch on that. But this is a business, mate, that, Xero with an X, I should say, for starters, which frankly has ruined me. Every time I try and type the word Xero, I have to consciously put a Z in the front. That often we've talked about Xero, the cloud company. Let's touch on, mate, that because there's so much to talk about with Xero. It is such a big business. It's such an important business for a whole lot of reasons, both for current shareholders, for current customers and clients, but also because I think, in my mind at least, it was the Australian forerunner, not the global one, but the Australian forerunner for the whole concept of cloud, of software as a service, of distributed software in a really way that we kind of all take for granted these days. And we kind of talk about it knowing what it is by looking at Xero. So let's try and distill that down for our viewers. Let's start with what exactly Xero does. And then maybe you can give me a bit of a tour on the whole cloud concept and why that's relevant, why that's important, and how that's actually changed the game for a whole lot of investors and a whole lot of companies.
Yeah, absolutely. So, Xero is it's actually a New Zealand-based business, but another one of those New Zealand-based businesses that we do love.
Australasian.
Yeah, we do love to claim it as our own. As you mentioned, it provides cloud-based accounting, generally to small and medium-sized businesses, and also to their accountants and bookkeepers. And it was a business that was founded in 2006, and it's really impressive when you look at its market cap now. This is a business only founded in 2006, Scott. I believe it's over 20 bill market cap, so it's a big business, one of the leading Australian tech companies. It was founded by Rod Drury, who worked at Ernst & Young, I believe, at the time. So that's one of the big four accounting firms. And he became frustrated with the desktop-based accounting software of the time. So he went out to build his own solution. And apparently they started with 4 employees and operated out of an apartment in Wellington in New Zealand. And now it's one of the largest technology companies on the ASX. So it's also generated a really dominant market position in Australia and in New Zealand. So the company has more than 1 million subscribers in Australia and just shy of 450,000 in New Zealand. So a dominant market position. The company is also a global one, and it's looking to establish more of a global footprint as well in some other larger markets. So it has over 700,000 subscribers in the UK, around 280,000 in North America, and its rest of world segment, the business has just under 200,000 subscribers as well. So there's certainly more room for it to run globally, and I'll touch on that a bit later. But essentially, so as you mentioned before, Scott, I used to work in accounting, and I actually used to help train and use train different clients on how to use some of these accounting platforms, and Xero was by far my favorite solution. But let's take a step back. So before cloud accounting became widely adopted, people used to use desktop accounting software. And before desktop accounting software, people used to send in a whole multiple shoeboxes of receipts. And there was, of course, a bit of crossover here, but to keep it simple, that was the process. So if I'm an accountant and I purely get a shoebox of receipts and bank account summaries, that's just going to take me ages to go through. And knowing the hourly charge-out rates of accountants and bookkeepers,
right,
this is certainly not an ideal scenario for any business owner. So then desktop accounting software came in, and it made this process much easier for accountants, much easier for bookkeepers, and it just made traditionally, I guess, more manual processes far more efficient, reducing costs and the chances of mistakes and missing transactions as well, and expenses, which can also increase your tax bill at the end of the year. So it was certainly a benefit when that came in. But the newer game changer, which happened, still a number of years back now, but businesses are still upgrading and changing to this day, is the cloud-based accounting system. So Xero was the early mover in this space, and the
And
likes
before you,
of
before you go, I'm going to interrupt you
yeah,
very quickly, just to define our terms a little bit, because we're talking about desktop computing, and then we're
absolutely.
talking about cloud computing. And I know what you mean.
Mhm.
You know what you mean. I'm sure most of our viewers do as well. But I'm old enough, Chris, believe it. You believe this. I'm sure you believe this. You're too young to remember the days of Windows 95 when you would get in the mail or at the shop at Harvey Norman 13 disks, literally stacked one on top of the other for Windows 95. When you go and install Windows 95, it'd say, "Please insert disk 1 of 13." You do that. You wait for half an hour, say, "Please insert disk 2 of 15." You do that. And you go on through the process until it was all done. These were pieces of software loaded on your specific desktop computer. If you wanted to access your desktop accounting software, you would literally log on to your computer in front of you. You'd have one copy. It was your copy saved on your C drive or wherever. And it was all done locally, literally on your desktop, on that computer's hard drive, right? And that was a massive step forward from the shoebox. Better for the companies, better for the
Mm,
accountants. It systematized everything. It was great. And that was fantastic.
mm,
But then you're talking about the cloud where you're not saving stuff to your local C drive. You're actually saving it
mm,
to the cloud. We've talked about it. We've actually done a video on this. Our favorite investing books
mm.
explain the cloud like I'm 10. So if you want to, viewers, if you want to have a look, check that out. But the cloud was a step forward. Sorry, mate, I just wanted to stop you there just to kind of set the scene for what
No.
desktop looked like. These days, my Windows updates come over the internet automatically, as do my apps on my phone. The same kind of
Mm.
approach, although we're not talking about local installs here. You jump on a website, you put your accounting details in there, it's saved on a server somewhere out there in the proverbial cloud. And that's been a big move. Sorry, I just wanted to stop and kind of
Mm.
define our terms, but you pick it up from there.
No, absolutely. So yeah, what are the benefits of this then? I guess so. The first benefit of the cloud is you can access it at any time from any device. You don't need to have it
Mm-hmm.
first installed onto the laptop, as you said, to be able to use it. It's also far easier to share data and information. So what I mean by that is if I used to have clients who would send across a file or get their bookkeepers to send across a file from their desktop accounting software, and we would then need to install it onto our own computers. We would then work on their accounts from there. The problem is now that the file that I have worked on is different to the one that the bookkeeper or client has worked on and installed on their own device. So if we need to keep going, I guess, back and forward to help get the accounts complete, it required a much more time-consuming and challenging process to get the data across. And if, for example, the bookkeeper, and I know this happened plenty of times, continued to do some work in their own file
Oh,
whilst
no.
we're working on a different file, then it just, it became a nightmare and meant that,
Yeah.
there was work that was lost, work that was wasted. So yeah, that's certainly another key benefit of the cloud and why I loved Xero so much at the time when I was using so many different solutions. Cloud software also made the bookkeeping process in particular more efficient. So through the cloud, you can actually connect your bank account directly to Xero itself to cut down on data entry time. So what we used to do was we used to import a whole bunch of Excel spreadsheets or other data files, and you don't need to do that as much anymore because you just link it to whatever bank account you have, and the transactions automatically flow through to Xero, which is fantastic, made life a whole lot easier. And the other benefit is that your data is also automatically updated and backed up in the cloud. And that can help customers to protect their data as well. You lose your computer and, well, if you haven't backed it up, you're in a lot of trouble. It could be hours and hours of work that can go missing. So yeah, these are just a few key benefits of the cloud-based software, I guess, and something that Xero really leveraged off, particularly in its early days, as competitors like your MyObs and your Reckons were really slow to move and adapt to this changing environment and push for the cloud-based solutions.
I love it, mate. It's a really important one. I think it's almost hard now for if your viewers haven't gone through that process themselves or lived through that or paid attention through that change. It really is hard to really overstate how fundamentally shape-shifting this whole decision was. Right, the move from local to cloud, whether and everything. We talk about we've talked about HR systems in the past. Internet banking is effectively a cloud computing system, right? We all log on to a website, we update, we make our transactions. That's kind of the idea. And we don't necessarily in our lives, even 2-3 years ago, the technological changes we take for granted now were so unimaginable, so new, so disruptive. And as you say, others were late to get to it. But since then, Xero kind of gets pointed to by investors, by technologists, by business people as one of the big forerunners to kind of make that case as to why having something on the cloud, and again, go back to that our favorite investing book series that Chris did on Explain the Cloud Like I'm 10, because that gives you a good sense of it. But that change is so fundamental and so important. It's lowered barriers to entry. It's lowered costs. And again, for Xero, particularly for Xero's customers, but then the others have come along for the ride. Most things we use these days. In fact, I'll tell you something. The Motley Fool's entire system, I could run with it. If you literally dropped an iPad on my thing and said, this hasn't been used yet, I could do a day's work on that with about 1 minute setup. Because I can log into our email, I can log into our computer data systems, I can log into our HR system. It's all cloud-based. That's kind of the point. It makes it so accessible, so easy to use, so seamless, brings cost down, brings friction down, because it just simply is easier to use. Now, one of the things I think too about Xero, if we think about it, is it really not only did it make it easier for existing customers, but it bought, we talk about the unbanked, people who don't have bank accounts, the unaccountinged, which I was never going to catch on as a word, those people who are like, oh, I'm too small for an accounting system. I don't really have the time, the interest. It's too complex. I have to download it to a spreadsheet. I'll just do the shoebox thing myself. I'm a tradie. I'm a hairdresser. I can't bother. Not worth it. Don't want to. Too hard. One of Xero's big moves was actually not so much just disrupting the current system, that was part of it, was actually opening up accounting software, accounting systems to a whole lot more people, right? Who all of a sudden went, oh, I can do that. I get it. That's easy. And again, Xero's not the only provider. There's others in that space, but the whole idea of bringing it to the cloud meant that with a mobile phone, like I've got here, or a laptop or whatever, you can be up and running in probably minutes to an hour. And then your whole life gets so much easier, so much more quickly. So not only did it take market share from the existing incumbents, but it genuinely grew the market, right?
Oh, absolutely, and yeah, the point you made is a really appropriate one, because we used to have clients who would send in the shoeboxes, and then all of a sudden when Xero was available, well, we could teach them how to do the bookkeeping processes on Xero because it was so simple, so easy to do, and that saved them costs, and it also it really helped establish this cloud industry and grow the software space within the industry, because so many more people now had the access and the ability to be able to use it.
And Matt, one last thing I want to add, and your show, not mine, but for the fun of it, one of the things I think is great about Xero that most people underestimate, you would know this for sure, but they turned the humble suburban accountant into the best salesperson you could ask for. The idea of an accountant who said, can you please use Xero? It's easier for me. I can do a better job for you if you use Xero. It'll cost you less to use Xero. It actually, when you don't need an accountant, you can simply say to an accounting practice, hey, if you take all your clients to Xero off their desktop stuff, it'd be easier for you, the accountant. It'd be easier for them, your client. Why would you not do it? And so it turns out, I remember in the early days, mate, it was literally the humble suburban accountant who was the biggest advocate, the biggest kind of, pusher, that they became the sales arm of Xero in a lot of ways, because if your accountant's on board and says to you, hey, why don't you use this because it'll make your life easier, my life easier, it's a really, really nice, it's not quite a network effect, but it's not miles away. And I just thought that was a really, really, really smart move from Xero, is if you're trying to convince the hairdresser, the barber, the chippy, the takeaway shop to start using a cloud accounting piece of software, that's hard work. But if you can tell the accountant, get the accountant on side for them to say, hey, next time you do your numbers, do you want to use this instead? It'll make your life easier. I just thought it was absolute genius.
No, absolutely, and that process happened similar in ours. So I had my old man who ran his business, I guess, with using desktop accounting software, and I tried to push him onto using it as well, as an accountant who's used it before. And there's also, the accountants, they had the option as well to be able to sell these subscriptions at a cheaper price if they sold it in bulk, which was another incentive for them to help save costs for their employees. Also, if you're an accountant, I know I had when I used Xero, 60-70% of the clients, when I all of a sudden had to use a Reckon client who used Reckon, I was like, oh goodness, how do I use this again? Because you want to use the one piece of software that you're familiar with, that you're comfortable with, and that was certainly the way that it was going in the industry. More and more accountants were really pushing hard towards Xero. It's the solution. It's the easiest one to use. It's the easiest one to train our customers on. Let's push the customers over there. It certainly saves on acquisition costs for Xero, which was great for their business and certainly helped drive their really strong growth and execution over the last 15 years or so that they've been in business.
Yeah, and we spent a lot of time talking about the origin story. If we seem like fans of Xero, the business, we absolutely are. It is, I'm going to say with tongue firmly in cheek, one of Australasia's great success stories of the last 20 years for all the reasons we've just gone through. And I think, disruption innovation is such an important part of an investor's toolkit. And being able to recognize and understand that. It's gone from, I know what the share price was originally, mate, but it wasn't that long ago. It was $10 or $12, and now it's 130, 140 now. Am I close? I haven't looked recently.
That's pretty close. So 140, 150, I think. I haven't looked at it over the last few days either. Somewhere around there.
So a remarkable jump in share price over that period of time, and justifiably so, as you say, for a business that's really swept all before it. It is, the story is an important one for a whole lot of different reasons, which is all fine, except we're not a business biography business. We're not a business biography YouTube channel. We're an investing channel. And so the question is, the very best businesses can be terrible or wonderful investments. The very worst businesses can occasionally be an okay investment, but often bad investments. The question for us, of course, is not so much looking backwards, because that's done, but looking forwards. We've got to try and work out whether or not Xero at $140-something a share represents value for today's investor, despite how much money's been made in the past. We can't live in yesterday. We've got to live in tomorrow. So let's go through some of the pros and cons. Of course, it'll include the quality of the business, and we've been through a lot of that. But let's talk about the investment case proper, mate. As I said, even the best business can be a terrible investment if you pay too much. So what are some of the pros? If you're going to make the bull case for an investment in Xero, that's XERO. XRO is the code, by the way, on the ASX. If you're going to make a bull case and convince me right now to buy shares in Xero, how are you going to do it, mate?
Yeah, well, we've already, I guess, mentioned the benefits of the cloud, so we'll tick that off. But I guess another key reason why I like the business is there's still just a massive global runway ahead of them. So, on the company's presentation, it listed that the cloud accounting total addressable market for total subscriber numbers is 45 million, and Xero has only really just scraped the surface of this opportunity. So, also cloud adoption in its global markets is still really low relative to Australia and New Zealand. So, global adoption of cloud accounting it's still around according to the presentation, around the 20% mark. So there's an absolutely, I guess, an opportunity for the company to sustain strong growth rates for a number of years yet, particularly in its international segments where its adoption is lower. Another thing that I really like about the business is execution. So we mentioned this so far. So in 2015, the company had 123 million in revenue. It now has around 850 million in revenue in the most recent financial year, and the company has in the last couple of years also become a cash generative business as well. And it's by no means optimizing its margins at this point either. So the company, it's still looking to capture more market share globally. It's still continuing to invest towards this goal, but there's certainly the opportunity for it to significantly expand its margin over the coming years as well. And considering there's very little incremental cost to these sorts of businesses as they add new subscribers, there's certainly high potential for really high margins at scale. Another thing that I really like about this business is it's striving to become more of a small business platform. So what I mean by that is it's not just an accounting platform, but a platform that customers can use to manage nearly all areas of their business. So how do they do this? Well, they've developed, I guess, a number of partnerships with other software providers, and that allows its customers to integrate other software with its platform. So one key example I can think of this that is probably applicable to many investors and potentially many who are watching this is ShareSite. So ShareSite, as you know, Scott, it's a portfolio tracking tool for investors. So shared customers can now integrate their portfolios on ShareSite. So all their capital gains information, their dividends information, and they can push that straight through to Xero, and that can help them save time when it comes to tax time, because all that information just flows straight through the Xero account. So some of these add-on applications that they use, like ShareSite, they have revenue share agreements with these particular partners, and other applications they build themselves, so they get full share of the revenue. And I guess the benefit of being a platform is that as more customers use more of the applications, more of the integrated applications, it makes Xero more and more mission critical for their business and more difficult to leave. And it's also a way that the business can grow its user spend. So, I guess that's the bullish case for Xero. When it comes to the when it comes to the bearish case, it's considering that Xero sells its solutions primarily to small to medium sized businesses, so businesses that are historically more vulnerable to economic downturns. It can mean that if we see other periods of economic weakness like we did in the pandemic, for example, that can impact on Xero's retention rates and also potentially their pricing power, and that means that growth rates could suffer. So that's certainly something to keep in mind. Also, the business is still in the early stage of its adoption in some of its international markets, and it has less of a first mover advantage in some of these regions as well as compared to what it did in Australia. So there are solutions in the US like QuickBooks Online, which is Intuit's cloud-based accounting software solution. So it has quite a comparable solution to Xero, but has a larger market share in the US, and the business is growing at a similar rate. So how much market share Xero will be able to capture off them, and the impact of this sort of global competition is still up in the air to some extent. So if we look at, so in Australia for a while, the vast majority of small businesses were using MyOb, but Xero was able to capitalize on the fact that MyOb didn't have a strong cloud alternative. So that's what helped it really quickly grab market share in Australia and New Zealand. But a very high percentage of businesses in the US actually use QuickBooks, and QuickBooks also has their cloud alternative, QuickBooks Online, that I mentioned. So it's going to be more of a challenge now to capture this market share as customers, when they switch to the cloud, they may simply prefer to use the more familiar feel of QuickBooks, which they're already using, but just use it as the cloud alternative. And one final risk is that its competitors in Australia as well have really woken up to the benefits and the demand for cloud-based solutions. So the likes of your Reckons, the likes of your MyObs, they're both really heavily investing in cloud as well. So yeah, that's something certainly to look out for as well. And Xero will need to continue to innovate and continue to improve its solutions to make sure that its solutions stay sticky and that it continues to grow.
Nice, mate. Before I get you to make a call on the future of Xero's share price, or at least the investment hypothesis, I do want to ask you about valuation. I'm not sure whether valuation is a potential pro because the market is so big, this could be cheap relative to the future, or it's a con because if you look at the current share price, the current valuation is like, oh, wow, you're paying a lot of money for a business that hasn't got all that much profit just yet. So maybe it's both, maybe it's one or the other. But how would you think about valuation itself? I think it's probably got a positive PE for the first time in a while. I'm not sure it actually is delivering accounting profits just yet, but certainly cash flow positive, as you say. What sort of valuation we look at? How attractive or otherwise is that from an investment case perspective?
Yeah, well, certainly the PE would be something you wouldn't want to look at right now because I think the E's there, but it's very, very high. So, but
okay.
Yeah,
We won't use that as a decision maker.
Yeah, absolutely. So the valuation is, as you mentioned, the key worry for this business. So it's currently trading at, I think it's around 25 times revenue, a bit over 25 times revenue. So that's a very lofty price to pay. And it will likely have to have, it will likely have very attractive profit margins at scale, but certainly there's a lot of expectations around future growth built into that price. So, I still think there's a long growth runway ahead for them, but if I guess you look back at the growth of the business over the last 5 years, the business share price over the past 5 years, and you buy Xero expecting that the next 5 years will be the same, not at this valuation, I think, Scott. So your valuation is certainly a key thing, and as you mentioned, there are some great companies that are not great investments and great investments that are not great companies. And Xero, whilst, I still think I'm still leaning towards it being a market beater, I think it's going to be close because there's certainly a lot of lofty expectations built in on this share price that investors should be wary of when investing in Xero.
Yeah, real-time research here, Chris, while you were talking, $152 a share is the current share price on the 27th of October. The PE is 1,039.9 times, so a little bit higher than average. The market average tends to be about 16 through the cycle, maybe about 18 now or so. I don't really know, but that's a decent multiple of that number. So you are coming down on the side of market beating, mate, from the sound of it. If we look out 3 to 5 years as we like to, and say what happens from here for Xero is not a slam dunk necessarily in your mind, but you do expect it to do okay. Is it because of that ability to convert that revenue to profit over time, to keep growing the revenue, a bit of both? How does it get to be market beating over, say, 5 years?
Yeah, absolutely. I think it continue to grow. I think it continue to grow for a long period of time. So its tail is long, which means I think it can get double-digit growth for a long period of time, which will help eventually justify that share price. And then, as you mentioned, that the fact that its profit margins, gross profit margins are, I think, in the high 80s, low 90%. There's low incremental cost to adding new customers. There's certainly strong potentials for them to generate some significant cash flow margins at scale. So, 25 times revenue is a lot, but it's not going to be I guess, your low margin businesses where, you pay 1 to 2 times revenue at scale. This is going to have a lot stronger profit margins than that. But I think the long tail is the thing that will really justify its price. But you need to really look well long term into the future for this one, because even in 3 to 5 years, it's still going to probably have quite a lofty multiple. It's just the fact that the tail is so long for Xero. So it's going to be a volatile ride when companies when you're buying companies at such high valuations. But it's such a good business operating such a big attractive market. I still think that it's just a market beater here, despite that valuation.
Very nice. Thank you, man. Now, I should ask for full disclosure. Do you own shares in Xero?
I do own shares in Xero, yes.
Excellent. Good man. I do not. So there you go. That's got the disclosures out of the way. Chris expects this is going to be a market beater over the medium to long term. That's the only time frame that should count for investors, as our co-founder and chief rule breaker, David Gardner, likes to say. Mate, thank you for sharing your expertise on Xero. We've really appreciated you sharing some time, just explaining a bit more of the Xero business, what it's been, where it is, and where you think it might be going. I have a suspicion you might just be right, but we'll find out in that 3 to 5 years' time or so if Xero can continue to be the market beater that we expect it to be. Well, folks, thank you for joining us for another episode of Stocks in Focus. We appreciate your time. If you would, please do subscribe to the Motley Fool YouTube channel. Just hit on the little subscribe button down below this video. Also, the notification bell, if you wouldn't mind, because otherwise, you're not going to get an alert next time we publish one of these videos or our favorite investing books or Stocks in Focus or anything else that we publish here on the Motley Fool channel for Xero, for free. So why not subscribe, hit the notification bell, as I say, to make sure you get the latest when we release it. Also, don't forget, we do have podcasts, the Motley Fool Money Podcast and The Good Oil with Scott Phillips. They're our 2 podcast series. And of course, go to fool.com.au. Jump on Twitter. You on Twitter yet, Chris? Have we had this conversation before?
No, not on Twitter yet.
Shaking his head. Yet. This is going to be 2021 is the year I'm going to get you guys on Twitter. All right, so if you are on Twitter or Instagram, you can follow the Motley Fool or myself, and the handles are the same. So it's nice. As your Twitter or Instagram, go to @the Motley Fool AU or @TMF. That's obviously the Motley Fool @TMF Scott P. If you're on Facebook, check out the Motley Fool Australia. Just facebook.com/the Motley Fool Australia or facebook.com/Scott Phillips Money is my work page. All right, folks, thanks again for watching us for this episode of Stocks in Focus. On behalf of Chris, myself, and the whole Motley Fool team, until next time, Fool on.